Hello everyone and welcome back to my YouTube channel. I hope you're doing great, and in today's session I will show you a powerful trend trading strategy using free indicators on TradingView to achieve high success win rate. So without further ado, let's go ahead with the video. Trend trading strategy seeks to benefit from a market by identifying a continuous price movement that is likely to continue in the same direction. And in essence, it is a strategy that seeks to follow the trend and benefit from it as it develops. So let me tell you a very basic technique for identifying the trend of the market. So for example, if the general price direction is upward and there is a series of higher lows and higher highs, we may conclude that the market is trending towards an upside. On the other hand, if the overall price direction is downward and there is a series of lower lows and lower highs, we may reasonably assume that the market is moving towards a downside. And I mentioned at the beginning of the video that this strategy would incorporate indicators that are easy to access on MT4 or TradingView platforms. Some of the purposes of a technical indicator includes trend identification, entry signal, trade management, and determining when to exit your trade. So today's lucky winner for this strategy is a simple moving average indicator of period 200. And here's an example how it works. If the price is trading above the 200 moving average, we will only seek for long trade signals, and vice versa. If the price is trading below the 200 line, we will aim for a short trade opportunity. And we will also add a two moving averages of periods 25 and 50, as they will assist us to determine the exit and entry points. So let's open up a chart, and I do really love to use the USD JPY for this specific trading strategy as an example, and there is a simple reason for that as well. In general, USD JPY currency pair just tends to trend steady either to the upside or downside. There is no big mess if we will look at the price. In that case, it just creates significant opportunities in the market to profit, as USD JPY has longer periods of stability along with volatility. But feel free to use the strategy on any currency pair that tends to trend. So for example, Euro JPY or maybe AUD USD. But the choice of your currency is really up to you. To begin the strategy, we need indicators. Of course, to add all three indicators, just simply navigate to the indicator section and type moving average, so MA. Of course, on some trading platforms it could say simple moving average, so don't get confused because it is the same as moving average. It is just named differently. So there's no panic, and let's keep on going. So now triple click on it because we do need three of them, and now let's adjust the settings of it because we cannot play with the wrong cards and magically expect high wins. So to adjust the settings, just basically click on this setting bar and go to the input section and change the length from default to 200, and do the same thing for another two moving averages. So it's going to be 25, and as I said, we will be using 50 as our additional confirmation for this strategy. So the first step is done. Congratulations to the ones who passed it. And now I like to use this strategy mainly on higher time frames, so such as 1 hour or 4 hour is ideal for entry points and maximum pip gain. Oh, and by the way guys, I placed few trades today based on the strategy, so here is a quick sneak peek on how it looks like. As you can see, NZUSD been doing nicely, as well as Euro USD. They've been in profit so far, so I will keep monitor it because, as I said, I'm happy to share this strategy with you all, so probably I will update with the profits at the end of the video, so stay tuned. So here's the rules to follow if you would be looking for a buy trade opportunity. So the 200 moving average must be trending below the candlesticks, which indicates that we are in the buyer side. And guys, please don't go against the trend. It is very crucial to follow the trend in order to make those profits, but not against it and blow your account. I don't really want you to blow your account by using this powerful strategy to make the pips but not to lose them. And after you sort out the direction of the trend following that 200 moving average, take a look at the 25 and 50 moving averages. This specific duo of moving averages works brilliant together to show us a potential entry opportunity by creating a crossover. So in this case, we have a squeeze pattern formation, which is quite quite often pattern in Forex markets where a downtrend merges into one point with an uptrend, creating a small room for the price to move. But of course, if the buyer pressure is stronger, like in this case, the moving average of 25, so that's this blue line, will cross over the 250, confirming that the bullish power is there, and this is what you should look out for when applying this strategy. We can also notice that once the buying strength was increasing, it actually broke this horizontal area of a sensitivity, and it's now acting as a support for this trade. The market always moves in the push and exhaustion scenarios, so like in this example as well, we have this push, small exhaustion, and now continuous move towards an upside. We had a nice bullish engulfing candle as a confirmation, and probably this trade was reaching more than 116 pips into the profit. I will be transparent as I can, and I think you should also know that these moving averages also act as a strong support for any trade that you might take, and I strongly encourage you to portion the trade into TP1, TP2, and TP3. And of course, once take profit one reached, you're moving your stop loss. So like in this scenario, let me just quickly grab this other tool. So once your take profit one reached, so let's say around 20 pips, you're moving your stop loss to an entry, and now you're having a free trade. And you can also use 200 moving average to plot your protective stop loss. So you can initially place it below 200 MA or below the horizontal area of a sensitivity, and then of course you can adjust accordingly to your trading plan and risk management. I mainly use 2-to-1 risk reward ratio, but as I said, it's different when it comes to the individual trader. And to exit the trade, you should look out for the moving average of 25 crossing below 50. This indicates that reversal may occur and the trend is changing to the bearish one. So moving on, here is an example of a sell trade scenario and what you should follow to perform this strategy. 200 moving average must be above the candlesticks, which indicate that you are in a bearish side, and after that the moving average of 25 should be crossing below moving average of 50. So let's examine this short trade opportunity. As we can see, the price has been trending towards a downside. We have a multiple rejections on this trend. As you can see, it's been shooting towards a downside. Even on the last rejection over here, it definitely shooted towards a downside as well. It just basically shows that the sellers are much stronger by not letting the buyers to break the trend. Clearly, we can definitely spot this huge M pattern formation. As you can see, we have kind of double tops over here. Of course, this support zone was slightly broken with a false breakout, but then again, it definitely continued to move towards a downside. So most of the time, these specific M pattern formations, they also have a neckline. So once that neckline being broken, most of the time we also have a nice push, exhaustion. We can see we have a bearish engulfing candle as a confirmation. The moving averages also created a crossover recently, so that's again indicating that the buyers are not that strong enough. And as you remember, I said that these moving averages also stands as a good support and resistance. So even if you will be taking a look, let's say over here, as we can see, we have this huge VIX, so that's rejecting of a 25 moving average shooting towards a downside. Again, it's been bearish engulfing candle over here. That's 50 moving average is shooting towards a downside again. In this scenario, you can definitely place your stop loss slightly above your moving averages or slightly above your recent horizontal area of a sensitivity. Also, by the way, guys, here is an update on my trades. Euro USD and NZD USD been doing nicely, $306 into the profit. Once again, guys, thank you so much for watching me, and I will talk to you next time. Bye.